You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to speak with you again, Jim.
You were telling me that it appears that the silver gold bull is digging in its hooves right now.
We've seen very strong action over the last few weeks, and actually, if you look at the chart action, the bottom potential has been forming since the last week of June in the mining stocks and in the metals, but specifically some of the better mining stocks. And then about the first part of last week, the energy kind of dissipated a bit, and prices rolled over. This morning, they're strong again, but they're below. I looked at some of the chart patterns I follow on some of the miners. They're below where they were last Tuesday and Wednesday. We want to see how this plays out, but it wouldn't surprise me to see a flat to lower week, and then perhaps a resumption next week. But when a bull's getting ready to charge, if you look at these things in Spain where they have these matador contests, they will stomp their front heels, their hooves, and they'll dig in their heels and when they really take off. And I think this is what the bull's doing. It's reconfiguring itself. We're having a healthy pullback, and the miners, are participating in this. And it seems to me that if you believe, as I do, that the very strong lows are in for this part of the cycle, a person wants to be watching their positions, seeing where they can add to their core positions, and trying to maintain what I would say an energy that's calmer than the market. In other words, try not to get caught up and be afraid that if you don't add more today that you'll somehow miss out. You may, but more than likely you'll have a chance to buy at a better level rather than trying to chase the market. And I have to do this myself because I'd like to add this morning to a couple positions, but I also ask myself, what if they can't get above last Wednesday's highs for several weeks? So if it gets above Wednesday's highs and it closes above there, then I might just say, well, I'm going to go add anyway. But for now, I'm going to watch and wait a little bit.
Do you think people are also watching and waiting to see if cruise missiles fly over Syria?
They certainly are, and it looks like that's been postponed for a while. You can't predict anything, but the president has said that he would go before Congress and ask for permission, because after, we discussed this a little bit last week on the air, but after the British Prime Minister was turned down by the Parliament for the first time in something like 240 years to be able to go to war even on a limited basis without their approval. And so I think that is going to be more problematic. But again, I don't think people should base their buy-sell decisions on the precious metals simply on whether something's going to happen with Syria or some other event like that, because the bull market itself will need long-term sustaining reasons to keep going higher, which they already have. And so these things are kind of what you might say flash in the pan compared to the more systemic long-range issues that you and I are watching to try to project higher metals prices.
Maybe gold would be pretty precious for some of the Syrian generals I hear that are fleeing the country for Lebanon.
Gold is always a last-ditch thing to have in your possession, whether you're a Syrian general or whether you're an honest American and Canadian citizen or whatever. It's just a good foundational planning to have some, in my considered opinion.
You were saying there were a couple of trends that caught your eye over the past couple of weeks.
One of the things that I've noticed is becoming more powerful, and I'm very positive about it. I'm glad to see it, and that is we're starting to see more mining companies withhold some of their production when prices are what they deem to be too low or not favorable, or even in some cases, such as with McEwen Mining. We don't mention companies too often here, and I do have a small position in this company, but Rob McEwen has been probably one of the earliest and most foremost consistent exponents of the idea that mining companies should hold some of their production back as inventory to support, not so much to directly support the price because that's not a huge factor, but just to be in sympathy with the bull trend and show that their support for it for their shareholders. And so Rob he holds something like a third to a half of his gold production of his company as inventory for higher prices, and he's gone on record as stating that he believes we'll see a minimum of $5,000 and perhaps even $10,000 an ounce before this bull run is over.
Wow, those are some impressive numbers.
They really are.
We'll talk about that right after this brief break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. You're listening to HowStreet.com radio. My guest is David Smith. David, you were just talking about some impressive numbers. Again, we've emphasized on our shows, I think, over and over, patience is truly a virtue when you're investing in precious metals.
It's something that we all have to deal with, and I can tell you, I'm not standing up here talking like I don't have any issues with that. I mean, I'm like everybody else. I have to sometimes pull myself back, and as Stu Thompson would say, I have to buy and sell smaller than is rational. So, it's easy to go overboard, and then you're stuck with the results. Sometimes they work out, sometimes they don't. There are several silver companies, and we won't mention their names, but there are several companies I'm very happy to see that they're becoming fairly consistent with holders of metals when they feel their production is not going to get what they think is a good price. There was one company that published results of the last quarter, and they only made $120,000, which is a pittance. But the reality is, when you dug into the news release, you found that they withheld 700,000 ounces of silver production. Now, those ounces would bring today, even with a slight pullback in prices, about $5 an ounce more than if they had sold last quarter when silver was under $19 an ounce. So that's $3.5 million of potential profit. And that's the sort of thing we like to see, not just so much because it's in sympathy with the bull trend, but because it rewards shareholders for good business skills. And it's not like speculating. It's really about holding inventory and getting a good price for it, which is what any good business does.
I also think, too, it's protecting their workers. They're still producing. They're keeping their miners busy. They're bringing product up out of the ground, which is a good thing. Because I know some places, with especially with shares being so low, they're running short on cash. So I think if they're still producing and withholding, that's a sign the company's pretty healthy.
That's a good point, Jim. Not all companies can do this. Some of them are so close to the wire that they don't have a cash reserve to do it. But when you see a company withholding the metals like that, that is a very good indicator that they got a pretty strong operation. I think that's an excellent point that you brought up, Jim. Something I'd like to mention that kind of exciting happened over the weekend. I think I talked once before a little bit about David Morgan's alert service, and to my knowledge, it's unique in the industry. But what it is, when you become a subscriber to the Morgan Report, you get access to a little icon that goes on your desktop and the software that goes with it from the site. And whenever David puts out a special report, which he did on Friday, or when the newsletter is available, or when there's some special piece of information, that alert service, it's always live on your desktop, but it's out of the way. It goes off. And so this happened to me twice over the weekend. On Friday, I was doing my work Friday evening, and I saw this alert. And David had done a special video about his view on silver, and his suggestions for looking at it a certain way. And this is not a trading service, but it's kind of an idea to give you more information for your own trading decisions. Went over and watched it, and then on Saturday I was doing some further work for a report that I needed to turn in for another publication, and it went off again, and it told me that the September issue of the Morgan Report was now available. And when you click on that, you don't even have to log in as a subscriber. It takes you right to the alert or to the monthly, and you go right in and read it. So it's a pretty exciting service, and I've used it, with David for a number of years since he first came out with it, and it was still exciting to me, and I have to believe that it would be exciting to any new subscriber to have something like that, which I believe is unique in the industry. Yeah,
so often you turn on your computer and the information that you pull up from a newsletter is out of date.
It can be, and not only that, it may not be timely sometimes, and so I subscribe to other letters as well too, and usually what they'll do, they'll have it could be a very important alert, and it comes in your inbox, and if you don't happen to see it that day, and there's no trigger there to let you know, then you might find it the next day, and sometimes it's even something that you could decide to act on within the hours that the market's open, so or the evening session or something. So it has all sorts of ramifications, and I just like, in this day and age of instant communication, it doesn't get much more instant than that.
I was going to say, once I opened up my messages from the weekend, I had 1,100 waiting.
Wow.
So you can tell, if somebody doesn't really stand up out of the crowd and wave their arms or shout and yell, they could easily get buried.
That's really true. That's really true, Jim.
Well, thanks a lot for chatting with us, David.
You bet. It's been a pleasure, Jim, and we'll watch the bull unfold. I think it's going to be very exciting, and I think those people that are willing to take calculated risks, I think they're going to be rewarded over the next 2 or 3 years, probably on a fairly consistent basis.
Again, thanks a lot, David. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.